Hey guys, Mike here. So what an OPEX day, or well, maybe not. Maybe we're going to get into that. Right? I'm going to show you the charts. I'm going to show you, I always say, and I know it's weird to say, I admire somebody who can do their job well, and to watch what the market makers did today in the market was just genius. I mean, it was absolutely perfect, right? And we're going to go in there because I read the comments in the videos yesterday about why the market sold off. We're going to go a little bit into that as well. But obviously, jam-packed video as usual. And to start off with, yes, we are really buying the stock market. Let me tell you, retail investors are pouring a record $1.5 billion per day into the stock market. Of course, Tesla is number one. As I was saying, that's why it's hard for it to go down, because we buy in and people buy Tesla don't sell, right? And it's got 9.7 just from year to date. And you can see right here, this is retail daily net inflows in the U.S. equities versus the S&P 500. I mean, just look at that. Yeah, we were definitely putting it in there, and this is almost so much higher than any other time. So when you look at March 2022, and it kind of leads to this right here: smart money versus dumb money. I'll keep you updated every time it comes out. You can see it makes sense, right? We're moving up, and you do kind of see, like, I mean, smart money supposedly they're kind of dipping in, like maybe not, but no, not really. They're not really coming into this right now, as far as we can tell. And that leads me to this right here. So this is the S&P on a smaller time frame, and this is what happened yesterday, right? We moved down this just waterfall of selling, right? Of course, like I said, I read the comments, so a lot of said, oh, the reason why the market moved down is because Fed President Bullard came out and said something about 50 basis points. I think we should do 50 basis points or something to that phrase. And I want you to ask yourself something. Understand, the man can't even vote. Okay, and what do I mean by that? This is your voting members for the FOMC. Do you see his name anywhere on this list? Absolutely not. Okay, these are the alternates. Is he on this list? Absolutely not, which means he has no power at all, which means he can yappity yap all day long. So what we're led to believe is the market sold off that much from the words of a man who can't even vote. Okay, has no power in the room, really. Okay, you can yappity yap all day long, don't mean nothing. I can tell you what to do with stuff, but I don't control your accounts, right? So I can talk all day long, but I have no authority over you, no power, right? Versus, what do we talk about? Look at this right here. What we talked about yesterday. What was me perfect for the market to do? Sell itself down, get itself in position, because remember, options, the best zone to be in was going to be between like 405, somewhere in that area, wherever it was going to be, 404 to 407, somewhere in that area. So sell yourself down and put yourself in position, and then what did it do? Just ran around that 405 almost the majority of the day. And I want you to listen very closely. Do you hear something, guys? That is premiums screaming for help. Please, please help us. They are grinding us into dust. I mean, what an absolute superb performance by market makers today to keep it down into that range. And shockingly, what happens right here around 2 o'clock? Same time we sold off yesterday. This time we started to go up. Well, wait a minute. What's going on here? There's another Fed speaker out today who actually has voting powers. And she said after the open that we need to keep raising rates. Inflation is way too high. Somehow, though, the market took the word of a man who can't vote over the word of a woman who can vote, who has real power, right? Or could it be something else? Wait a minute. Are we setting ourselves up for Tuesday, maybe? I think we are. When max pain in the range is going to go up all the way to around 411, right? So really the range is probably going to be in between like 403, 412, somewhere in there. And so it makes a lot more sense to actually move the market up at the end of the day, just like it made more sense for them to move the market down. And this is what I'm talking about. I say a game within a game. The media is going to say one thing, but there's something else behind it, right? OPEX was today, right? Trillions of dollars in options expiring. And that's why I tell you, I put a lot of thought into this thing, but when this goes out at the very end, it's not just about support levels at certain things. I mean, what makes the support levels? What makes the resistance levels, right? And so it's not about just a range on the options part. It's also other things, right? Dark pools. I told them today, watch out for 40190 on the downside, because there was 4.1 billion in dark pool prints at that level, right? It can be a magnet, it can be support, it can be resistance, right? Another one is watch out for 400. And not just today, but I'm talking about going forward, because right now that's where the year-to-date anchor VWAP sits. And anchor VWAP can be pretty powerful, right? And so that's the kind of things you need to be thinking about, plus the weekly ranges, the daily ranges. And guys, if you get anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. And to set those in your charts, and I don't care if you're a trader or an investor. You know what I'm saying? I mean, I'd rather buy Tesla at 400 than 415. I'm sorry, especially if I'm going long on this thing, right? That can mean something later on, or I want to buy it at 380 versus 420 or something like that. But just seeing, oh, and have you ever done that? Like, you're not even looking, you buy something and all of a sudden it just starts to go way down. You're like, what the heck just happened? And when you start pulling stuff like that up, that's probably what happened. Right? It rejected off the anchor VWAP, the yearly anchor VWAP, the monthly anchor VWAP, the daily anchor VWAP. It rejected off some dark pool area. This is when I say a game within a game, there's stuff there, you just can't see it, right? And if I can learn it, who's a normal person with a normal IQ and a normal memory, you can too, right? That's the whole point in this channel. And, speaking of Tesla, it was mostly a quiet day for Tesla because we're used to, obviously, these huge swings, but you can see right there, where it bounced off of the low of the day was the monthly anchored VWAP, so that was support. It's talking about that, and then it rejected off 208, and I was like, 208. I seen where a couple of times maybe, but then I had to scroll back on a bigger time frame to look at this, and 208 actually goes all the way back to 2020. And we just scroll back. I like to manually draw my lines in. I don't know why, but I just like to do that. But you can see right here multiple times that this stock, if we zoom in a little bit, was support right there, was resistance here and here, and so just multiple bounces off 208. So I guess when I first saw that, I was like, oh, really? And then I scrolled back and understood a little bit more why that is. At least that's what I see, the reason why it rejected right there. But it's, again, it's just sitting in this zone. I still want to see it come down, get below 200, and test this trend line. I mean, I'm just waiting for that to happen. I think eventually it will happen. We'll see what happens next week. And, again, it's going to depend on options, guys, because, I mean, it's the most heavily traded there is. What was kind of funny, though, was that, the day in the market, what keeps happening over and over, and this is where we keep seeing pricing in coming, right, is these yields keep going up. Like where the Fed funds rate, people think it's going to end up, where big money think it's going to end up, it keeps going up. This is June, and you see where we were at, and yet it's been spiking up. And so we're talking about how far they're going to raise, what the terminal rate is going to be, and then when are they going to cut? And all of a sudden these cuts are starting to get real quiet. Like, oh, are they going to cut this year? Maybe they're not going to cut this year, right? And so the market has to try to take that in, because this whole big rally you're seeing, one big component of this is, this soft landing. They're going to raise it up, inflation is going to come down smoothly, and then they're going to cut rates out of the kindness of their heart, right? Or really just because we hit a recession. But, right now, what are you seeing? The Fed, and you see inflation ticking back up, right? Now, how much does that got to do with the new weights and the new calculation versus, and that's why you got to wait to see another, obviously, report out and stuff. And then how much does it got to do with the fact that, how much do we talk about this? When China reopened, when the market started rallying and you started seeing lumber and all these other commodities and everything start shooting up, what happens? That's going to cause inflation to slow, first of all, and that's not like the rate, it was decelerating too slow, and also start raising prices back up, right? And so that's what you got to remember on that, and that's what we're seeing right now, and what to see on the next report, of course. But the market's trying to figure that one out. And so that's one of the things you're seeing, why we're just kind of trading in this chop box and everything. And the one thing, and I'm going to end with this right here, is it came out, debt obviously is an all-time high for the households, right? But I want you to look at this, pay close attention to the older ages, and does something stick out to you? Because it sure did me. And I'm not going to say I find it funny, it's more sad than anything, but when you look at this, just take a moment, look at the kind of debt, auto loans, credit card, housing, student loans, and the age groups are at the bottom. And what do you see? Well, what you really see and what surprised me is 70 plus column over to the right still has student loan debt. And it's just one of those things, I didn't expect to see that at 70 plus. I thought, we was, maybe 60s, but it's just one of those debts you just can't get rid of. It's the third highest bill in the household now, right? And even when you're 70, 80, 90 years old, still paying that student loan debt, right? And I'm pretty sure if it's a federal loan, I don't think you can discharge that in bankruptcy. Am I correct on that? I think I read that somewhere. So that's one of the even medical bills you can, all kinds of stuff. But I don't think student loans, you can discharge that. So it will follow you to your grave, I guess, is the better way to look at it. So anyway, hope you guys saw out of this, guys. Remember, it's a 3-day weekend, so the market will be closed Monday. Crypto market will be open, though. I'll still be coming out with videos and stuff and keep you up to date, and we'll set up the week as usual, okay? So hit the like and subscribe button if you got anything out of it. Have a great long weekend. Enjoy being with your kids and stuff because they are out of school, and I'll see you later.